Well, hello, and once again, welcome to another edition of MEMA Supplier Insights. Really pleased to be with you today. My name is Mike Jackson. I have the pleasure of serving as Executive Director of Strategy and Research here at MEMA Original Equipment Suppliers. I'm really pleased to be joined by Ryan Robinson, Automotive Research Leader at Deloitte. Ryan, thanks so much for being here with me.
Hi, Mike. Great to be here. Thanks for having me.
Absolutely. So really exciting because we have the opportunity to review our second quarter MEMA OE supplier, vehicle supplier barometer. And so our second quarter barometer was on the topics of supply chain, globalization, and sustainability. So really appreciate you and the Deloitte team for all of your support with the barometer. And really, we've got some great insights. So looking forward to getting into it and kind of discovering or discussing it further with you. As ever, we go through the first question here, and that is, describe your 12-month outlook. We know it's a dynamic time in the industry, of course, but once again, as a reminder, we do have now delineated between light vehicle and commercial vehicle here on the left side. But we ask, how's your 12-month outlook for your business, and how has it changed over the past 3 months? Well, in this case, once again, it came in at 45, and so the light vehicle market a little bit more pessimistic than the commercial vehicle market. But I think to the right, you see the ongoing trend, and I think what's most important is simply the fact that for the ninth quarter in a row, the supplier barometer index has been negative. 50 being neutral, 45 5 points below that neutral level. So that simply reflects these compounding pressures. Ryan, are you seeing that from your clients? I mean, the idea that certainly volumes are back, but to a greater extent, or they're certainly back from the depressed levels, but there are still real pressures.
Yeah, there's definite pressures. I think this is it just characterizes the overall environment that suppliers are living through right now. We've got economic conditions that have been fairly resilient, I would say, over the past several months, but we're already starting to see some weakness coming through in the macroeconomic environment. We're still living through a heightened interest rate environment. We're seeing, obviously the elephant in the room. We're going to get into this a little bit later with a slowing of at least the momentum towards EV and that electrification transformation. So a lot of different pressures that suppliers continue to have to deal with going forward.
Now, that's absolutely right. And I think what's kind of tricky here, we'll get into it here with the top threats. And so as ever, we rank the threats here in terms of what are the greatest threats to the industry over the next 12 months. And what may be a little bit surprising is that the top threat now is weakness in the U.S. economy. So in some respects, that's a pretty significant change. On the other hand, then the second highest or the second greatest threat is poor sales of vehicles and programs supplied. And so you alluded to it, and I think this really comes back to some of the EV volume that we've seen is that some of the programs that have been awarded have fallen well short of expectations. And so this represents an ongoing pain point on behalf of suppliers, thinking that they, have a very strong success story to tell, only to find out that, depending on the program, obviously there are some that have performed very well, and there are others, though, that have fallen short. So, that, and then I guess the next couple, I'd simply say, changes in government trade policy. Obviously, the administration has made some changes here regarding imports from China, and in particular then on EVs, but also across a range of inputs as well. And so that just creates more uncertainty, creates some concerns, and then obviously implementation of new regulations. It's kind of challenging because, again, there are just a handful of different, oncoming pressures that suppliers have to continue to navigate, all under this, as you mentioned, this backdrop of maybe weaker than expected, planning volumes for some of these EV programs.
I think you said it. You got it right on the head there, Mike. For us, it's concerned, but it's also fueled by this era of uncertainty in the marketplace, right? Obviously, with trade policy, we've got an election coming up in November, which is causing a lot of uncertainty right now as to how things are going to move going forward the next 12 months. The poor sales point, for us, that goes all the way back to some of the research that we do on consumers, and it points us to an affordability issue that is pervasive kind of across the market now, right? We've got 8 out of 10 consumers in the US telling us that they're expecting to pay less than $50,000 for the next vehicle. And, on the whole, we're already kind of there. And when we talk about EVs, we're still, above that on average. So, it's a very, very challenging market. And I think that's prompting some of the decisions that we've seen in the EPA over the last several months to not necessarily change the end goalpost of where we want to be from an emission standpoint, but certainly it extends the glide path to get there, which I think is fueling a lot of those decisions at the OE level to transition their thinking away and maybe delay some of the transitioning to EVs and bring back the ICE technology, maybe in the form of hybrids going forward. So lots of challenges and uncertainty that's pervasive in the market at the moment.
Great points there for sure. So we'll continue on because I think this is it speaks to exactly the theme that you were highlighting, and that is based on the current business environment, which we know is very challenging. What do you believe your biggest opportunities are at the moment? And number one, top of the list is ICE. It's amazing, and so obviously that means that there's continued demand for internal combustion vehicles, and this clearly in many respects means hybrid. And so it's clearly the hybrid's a greater focus, but obviously there are also other programs that are ICE that are quite profitable right now, and so that represents maybe the perception that there will be a longer tail, and that's going to represent a greater source of revenue then as the glide path continues to modulate. The other one then too, I think is interesting is, business conquest, right? So there are some suppliers that may be in a softer position and they may not be able to, or may not want to hold a program. And there are other companies that say, look, you know what, that's something we'll be happy to take and we can grow that business and be stronger. Additionally, then obviously EV, to your point, cost is a real factor, and this is why it's so important to try and improve and to bring to market some of these vehicles that are much more cost effective or much more attractive or affordable, right? From a price point standpoint. And I think this is clearly what is also going to be growing here over time.
Yeah, I think that it's the second one on this list that really jumps out for me, right? That business conquest and consolidation point. I think it talks to just the amount of pressure for as long as suppliers have been under that amount of pressure, that's really causing them to think very carefully about which programs they can keep, they can afford to keep, considering some of the margin compression going on. And that's causing on the other side of the coin, as you mentioned, that opportunity in the marketplace to maybe make a strategic decision to take on a piece of business because you think it's going to lead to more opportunities down the road or a strengthening of relationships with your customer base.
How concerned is your company about the risk of stranded capital due to underperforming programs? And I think the key piece here is that a total industry, you're looking at over the past 12 months, 20% of respondents indicate it's either a substantial or the utmost concern. And that's very alarming, knowing that some of the precise pain points that suppliers have faced, but knowing that it's actually the next 12 months is expected to jump dramatically to 33% of respondents indicate it's substantial or the utmost concern. This is a real concern. This is a really, really dramatic increase and really kind of a red flag here. And then the response here, how has your company responded to its risk assessment of stranded capital? Negotiating with customers, CapEx reductions or delays, seeking new business. And so there's not really maybe a silver bullet here, is there, in order to try and defend on this, Ryan?
I don't think so. I mean, this is, this is one of those unfortunate situations where if you were investing, like we saw on the last slide, for growth, and you were an early adopter and you were putting all of the pieces in place to take advantage of the EV transition, and now you've almost got the rug pulled from under you in some ways by this lengthening of the timeline to get there. You're really between a rock and a hard place, because you've now invested in and deployed a significant amount of capital that you can't utilize, right? So the question then becomes, how do you protect your margins, right? And how do you do that and think about the continuity of supply of the programs that you still have, right? And how do you pivot back to ICE and to those kinds of technologies? And as we've known, I mean, you and I were talking earlier about this, negotiating with customers. I've seen this top of the list forever and a day, right? And it is, as we know, very, very challenging if you're a supplier wanting to go back to your OE customer who is also under very similar pressures to protect margin, to then renegotiate, piece price or whatever it is in your contract. So, this is it's a very challenging environment. And to your point, I don't think that there is a silver bullet in this mix anywhere. It's going to be a combination of a lot of these mitigation strategies to try to keep yourself above water.
Ryan, I really appreciate your time. Great, great insights as ever. I want to thank Ryan Robinson, Automotive Research Leader at Deloitte. And by all means, if we can be a resource, please don't hesitate to reach out. Thank you for watching. And Ryan, thanks again for your time.
Thanks, Mike. Really appreciate your time today.